Good afternoon and welcome to another of our webinar Wednesdays, number 80 in managing your small business beyond the pandemic. I'm Kelly Bearden. As you can see, I'm with the guy sitting next to me. It was the very first one as we kind of go full circle, come back to where we came from. We'll use all the cliches maybe. But going back to EIDL, which we talked about on pandemic series number 1, about 18 months ago or 80 weeks. So joined by Keith Brice, I'll introduce Keith more officially in a few moments, but we're going to be here today and we're going to talk about mostly, almost exclusively, the EIDL program. So let's get going. And here coming up on Webinar Wednesday, to give you a heads up of where we're going the next few weeks. Next week, we will have a special guest with Bo Blodgett from RCAC, which is a great nationwide rural lender. They do both business and they do some actual personal lending in rural communities. And so we'll have Mr. Blodgett on next week. The following week, we're going to get into exit strategies. And we bring in our exit strategy specialist, Michael Ballstad, and he's going to talk about the many things that maybe if you're a little tired of doing business, which I have heard from a few people, maybe some good ways to get out and get some money on your way out as well as for your business or trade activities. And then also we'll be back on October 13th as well. But today it's September 22nd. And what's up today is it's all about EIDL again. Going back over the last 80 weeks, we spent the first 2 weeks, I know, exclusively Keith and I in this building talking about EIDL. And I think we both have I think many of you that have been on many webinars or a few webinars, you know that Keith and I really think a lot of the EIDL program and think of it as one of the greatest of all the pandemic relief programs. Yet you are obligated to pay it back. I get that, but just some of the things that we'll go over today will reinforce how Keith and I feel about this program. About the only other thing, as you know, those of you that are around, we do talk about still PPP forgiveness during the open part, and we talk about a lot of other factors and things that are going on. The ERC, the Employee Retention Credit, which we'll cover in detail in October. And a number of other pandemic-related programs, but we're just going to mention one other one today, and that's the California Relief Grant, because it is up and going, and it is closing for new applications, and also those that are being waitlisted on September 30th. So on September 30th, it's going to be shut down. Right now, they are funding waitlisted ones from clients that have been around before, that have maybe put an application in several months ago, potentially, and have yet to be funded, but they are on the list still in the queue and potentially could be funded this month. So that's kind of what's going up with the California Relief Grant Program. We'll do our best to take your questions afterwards. And also we're going to have a poll. So let's start with the poll as it's going to want me to stop share again. It's doing this, hiding behind. Let me launch this particular poll. It's the same one we had 2 weeks ago. And there are a couple of questions about EIDL, and it's about what you have received. Have you received the COVID EIDL loan? COVID EIDL loan that came out in March of 2020, and what we're going to be talking about today, the EIDL Advance, which was a program last year that advanced up to $10,000, the Targeted EIDL, which is available this year for those in lower to moderate income areas specifically, and then the supplemental targeted, or you have not had an EIDL loan to date. So you can choose from that. You have, there's multiple, if you've received all of the EIDLs, the COVID EIDL, the Advance, the Targeted, and the Supplemental Grant, you can choose either one of those. You just can't choose all 4 of those and no EIDL loans for you. So we'll give you a second to do that. And then there's a second follow-up part of that question. And it is, if you had a EIDL loan for 2021, either an increase or a new EIDL, and this is only a single answered question, is it completely funded? Were you initially denied or in the reconsideration process, or you haven't heard back yet? And the last question is, we just did this last time as well because we compared it to a national statistic that we really well, we did a lot better than they did nationally. And it was, how would you rank the SBA EIDL process? 5, 4, 3, 2, 1 stars. So there's 3 questions you can jump into. If you've had the EIDL or if you haven't, you get to stop at the no EIDL loans for me. So what we'll do is we have, let's see, about 38% of you in right now. So if you've had the opportunity to look at the 3 questions today, if you've received an EIDL, was it the COVID-19 EIDL, the advanced, the targeted, the supplemental, or if you have not received one, you can click that option. And then if yes, you can continue on to questions about your process, where you are in the process, and about your satisfaction level. Okay, we've got about 43% of you in at this time. We'll give you another couple seconds to jump in. We really want your feedback on this, kind of see where the audience is today. So close to 50%. So we'll go ahead and end the poll and we'll share the results with you. And those attending today, 59% of you have the COVID-19 EIDL loan, and 55% received the EIDL advance last year. Another 21% the targeted EIDL, and also 14% received the supplemental, and another 24% that jumped in. And I think that number might be a little higher as you have not received an EIDL loan at this time. So the second part of that question is, if you have an EIDL for 2021, either an increase or you took out the loan this year, then where exactly are you on that process now? And it looks like 59% of you have not heard back yet. And 28% are completely funded, 14% have been in reconsideration or initially denied. Well, the good news on that, if you haven't heard back yet, is that you should hear something soon. We'll probably repeat this, but if you're in reconsideration or if you haven't heard either way, those that have submitted all their information should now hear within 4 weeks. So if you were in 3 weeks ago, you should be finding out relatively in a matter of days. And then the last part of our 3-part question was, how would you rank it? 45% of you give it 5 stars, another 24% 4 stars. So basically 80%, which is substantially higher than the national poll, which wasn't quite as good. So it's good to know that we've had more positive experiences here in the Central California region, in Kern County, Bakersfield, than we have nationwide. So thank you for doing that. As there were the shared results. And let's move on. So back here to the PowerPoint, introduce Keith now. So Keith has been a regular special guest on the webinar Wednesday. He's been a special guest host many times, a couple times. He is the president and CEO of Midstate Development Corporation. Midstate is or was before COVID, we'll have to wait till the numbers come back out, the very largest SBA lender by volume in Kern County. And for that matter, probably, potentially even the Central California region, but I'll get back to you on that. A graduate of banking school, president, and also graduate of Dayton, University of Dayton. He likes it when they have good basketball teams and get invited to the tournament. But he is president and served as president and CEO for a number of years, which is a certified development company, which is authorized to do fixed asset lending, a special 504 lending program. They funded over $450 million. Keith, welcome. It's great to have you back. Thank you for being here.
Thank you, Kelly. It's always great to be on. And besides talking about my favorite subject, the SBA 504 program, what we do at Midstate, the EIDL program is one of my favorites. And as Kelly alluded to earlier, I have been touting and encouraging our customers and customers that have reached out to me during the pandemic period, that the EIDL program is one of the better. I looked at EIDL more of a long-term fix compared to the PPP, and the PPP served its purpose, but the EIDL program, as you've heard in the past and you'll hear going forward, is more of a long-term ability for small businesses to whether it's restructure their balance sheet or provide that bridge gap to where they can return to whatever the new normal is in their business. So yeah, I'm excited to talk about some of the recent changes.
Well, let's, before we jump into EIDL, let's just give a quick update of the key programs that are still available. We're going to be talking about EIDL. So there's the employee retention credit, which is technically it's still open till the end of December. However, there are provisions in the infrastructure bill that is yet to be passed by the House and signed by the president that would end the program on September 30th. We'll talk about more of that in October. When that becomes available. Obviously, we're not going to talk much about the targeted advance today or the supplemental. We've talked about the California Relief Grant Program, PPP forgiveness. We'll get it back into that. And if you have any questions, and maybe into October. But today it is about the EIDL, and it is about the changes. And these are a few of the slides. This is just the slide that we had when we talked last in depth on webinar 78 about EIDL, when we were speculating that it would go to 2 million. So I have a little bit of a correction here. There had been 262 billion as of the 2nd of September. That number's changed a little bit, but not much. But you know, from what I could tell, I'm digging through all my sources, Congress had appropriated 367 billion. I believe that number now is 500 billion. So there's going to be a lot of activity. There's going to be a lot of demand. There's going to be a lot of people going after these EIDL funds, going after them early and using some strategies. There's some strategy as some of the funding is going to be, implemented, and it's going to be implemented on a schedule. So there's going to be funding that becomes available later. So speculating that there were only going to be 53,000 businesses that could get the $2 million EIDL loan, and still a borrower can get up to $10 million. Was not going to go very far, but it is great news to hear that they have over $200 billion left in EIDL right now. So those are the funds that we go from. Wanted to update you on that before we get rolling too far. So let's jump up here and start looking specifically at some of the items that are available. Before we jump into COVID EIDL, one last thing on EIDL. The EIDL program has been around for a long time. Again, it's the economic injury disaster loan. And when there's a disaster that happens, this is the program, the bellwether program that SBA pulls out. So just another one in our 3-county region here for the CSUB SBDC. I wanted to let you know that, that there is a deadline coming up. If you had a loss that happened in northern Mono County last year because of the Mountain View fire. The Mountain View fire was one that broke out in the Colville Walker area there and burned, I don't know, I believe about 100 homes rather quickly. Even one of our past guests, Jeff Simpson's home, burned in that fire. So there was a lot that happened, but the economic injury isn't actually the disaster of your home burning down. If you were doing business in that particular community and have suffered a loss because of economic injury, you have until September 30th to file a claim. And it doesn't affect anything else with any other disaster that you have. So each of these disaster programs have their own pool of funds, and they all are separate. So just wanted to let you know that before we actually got too far away from EIDL. We're actually coming back to it, as we say. So let's jump right here and let's kind of show you a little bit about what's going on here. And this is going to be the update that happened later than webinar 78 2 weeks ago. But here's all the changes. And Keith, I'm going to let you start right here with some of the things that are going on
Sure.
with some of the loans and some of the terms and some of the uses.
I think it's important to point out too about the EIDL loan process and application. This is a direct loan from the SBA, and I have to repeat that because there's always that blurred line between the PPP program where you would go to a lender, or a normal 7A loan, or a 504 loan where you would come to an organization such as ourselves. With the EIDL, that is a direct application with the SBA. Now, having said that, there may be some assistance that you would seek from, Kelly's organization, the Small Business Development Center, if you had some questions on the application. But it is again, a direct SBA program. Be leery of anybody offering you help for a fee basis to apply for an EIDL loan, because you literally can apply for an EIDL loan in your pajamas in your basement at night. So it's important to recognize that. So if you've never gone on the SBA website, please do just go around and play around with it. They have a specific link for EIDL. It's very user friendly. It's gone through a number of changes. So the crashing aspect of the volume in the past has been eliminated recently. So it's important that you get around and play around with it. So if you look at the screen, you see some of the benefits, and this is what really made this program very attractive for me and high on my radar and recommendation early on. If you look at the first slide, you have generous terms. You're looking at 3.75% interest rate for 30 years. Now, again, I can't not tell you, that is as reasonably priced term money as that you're going to find anywhere in the market. It is a loan, so don't as Kelly alluded to earlier, it's not a grant. But again, you're looking at 3.75% fixed currently. Now, there is a movement afoot with the Fed to do some things that may impact interest rates in the future. So this 3.75% rate may be very attractive. It is now, but even more so 2, 3, 4, 5 years from now. Again, it's a 30-year loan with, and this is something that's even, again, I sound like a used car salesman adding incentives, but there's a 2-year deferment. So again, I got to emphasize, you're getting a great rate, a 30-year amortization without payments having to be made for the first 2 years. So that is a really significant impact. So if you can look, how that impacts on a repayment burden, most small businesses understand, the shorter the term, the larger the payment. In this case, not only do you have a longer term, but you have very favorable interest rate with a deferred payment component. And the use of the program, it's very, when I say flexible, it's flexible of a long-term program that you're going to find in the market, both conventionally, if you knocked on a lender's door, or even with the SBA. The whole goal is to provide small businesses, that have been impacted, by COVID, with the ability to deal with and pay normal operating expenses and working capital. It has also been expanded, and I think we're going to talk about what are some of the changes that happened September 8th. And as you see the last line, again, this is a direct loan from the SBA. I tend to jump ahead on slides because I know the program, so I'll repeat some of this going forward.
And some of it bears to be repeating, like, for example, the 2-year deferment. You just mentioned that. The 2-year deferment, the one thing about it is if you get an increase in your idle, it is going to be deferred 2 years from when your idle closes here in
Great point.
2021.
Great point.
So that gets deferred another 2 years, even if you got a idle loan back in March of 2020. So also there were some people that didn't receive a full 24 months just because of the calendar. They will actually be bumped up to a 24-month 2-year deferment as well. But
And I guess, you know, when we talk about the liberal terms of the program, it's important to note that, you know, the program is designed to allow small businesses to recover and get back, and more importantly, even and be a little bit better than what they were in the past. So yeah, these terms are very liberal, but there's an understanding out there that some industries take a little longer, some have come back quicker, but there's not a burden of that loan pressure of having a 6-month or a 6-year repayment period.
so, and that is a great point too. That this is where the idle has changed, and the changes we're about ready to go over, is that it has changed from an emergency program to a recovery program, knowing that now we are moving toward recovery. And a lot of these lower interest rate payments and a lot of these uses we're going to talk about are going to enable people to reduce their interest payments and actually make their business either more profitable or actually more sustainable if there is a prolonged downturn. You know, I've talked to family members and they say, should I get this program? And I'm saying, well, did you think we would be 18 months later talking about the effects of COVID when it first came out? And of course, the answer was no. You know, the first PPP was an 8-week program. And now we're 18 months into this. So it also could be somewhat of an insurance policy if things don't actually work out in your particular business or industry as quickly as you'd like.
Hey, Kelly, that's a good point when you say insurance policy. Keep in mind, there's no prepayment penalty. So, you know, example, you take an idle loan and you pick a dollar amount and you get into the recovery of your business and you realize, well, you know, one thing, I really don't need this idle loan. Mm-hmm. You can pay it off.
Cost you $100.
Yeah. So that insurance analogy is really good to think about that. And I advise people all the time. They, again, you know, a lot of people leery of debt, as I am too. But the ability to get this kind of debt, this is a hopefully just a one-time scenario that we have. Speaking of that, and Kelly may cover this a little bit later on. Yeah, there's availability of funds, but don't wait until November 30th or December 15th to, you know, maybe I should apply for the auto loan. Again, you can do it at your leisure on a Saturday.
Yeah.
So you know, get off the side or and get out, and if you have any interest in doing it, do it now. I would encourage you to do it.
Yeah, and the program is extended until December 31st or when funds are exhausted. And you know, some of these people are going to be, a lot of these people are going to be grabbing 10 million at a time. So there's no really best guess. I thought it was going to go early, mid-October, but now I'm thinking it's going to last at least through the end of October, but earlier is better. So let's jump into these. I'll kick off number one, since I like the $2 million increase, and we'll talk a little bit about the exclusivity period. Is the cap is going now from 50,000 to 2 million. So with that is an exclusivity period. And what that is there will be no loan approval and no funds made and generated until after October 8th. This is designed to let smaller borrowers and Main Street businesses get in before potentially the money goes away. We saw it go away in one day in the restaurant revitalization program. So this is your chance to get in before. So if you're a first-time borrower, you might have some strategies. What if you really need, say, $1.5 million? you might want to be able to go in and get the $500,000, and SBA says right now they're funding them to the tune of about 3 weeks. And then in 3 weeks after that loan is funded, go back and increase it from 500,000 to 1.5 million. That at least guarantees you a $500,000 at least before that exclusivity period hits in October 8th. So little.
Well, and again, the concept behind that the exclusivity period is, as folks well know, when the PPP program was rolled out, there were a lot of small businesses that were initially shut out because whether they did not move quick enough, whether their lender wasn't prepared, or a number of reasons. So there was a little bit of pushback, and to the SBA's credit, they've designed these new changes to really give the smaller businesses with smaller needs a period to get in prior to some of the larger smaller businesses that are pretty aggressive with this program. Keep in mind also that we are just one source that's touting the SBA COVID EIDL program. CPAs, other organizations are out there. So there's a number of voices that are saying take advantage of it. That's the reason to jump in, fairly quickly to apply your application.
So the use of funds is the second big change. And whereas it has been pretty much limited to notes receivable and working capital, the current portion of that note receivable, now it applies to more forms of debt. For example, you can actually make prepayments of commercial debt that is non-SBA or federal debt, USDA, etc. You can pay off business credit cards if you have them. And you could have a business credit card at 18%. Dropping that to 3.75 is going to enhance cash flow immediately. So there's a lot of more uses that can be used for the funds rather than just the working capital and notes payable.
Yeah, well, one of the things which was big is the ability to make regular scheduled federal payments. I have a SBA 504, which is a federal loan program here. So this will allow for payments to get made or to use some of your funds for payments, not to pay off, not to prepay again for specifically for SBA debt, but to assist in making those payments. So it's important to understand that. So that's big. I mean, again, the EIDL intent is to allow small businesses to move forward and pay things that are in their normal course of operations.
So we talked a little bit about the 24-month deferment. The only thing I'll add on that is to please recall, even though the loan is being deferred from payment, the interest still accrues at 3.75% from the date that the loan was originated.
Affiliations. Affiliations are probably the most challenged eligibility structure, not only with EIDL, but with other SBA programs. And the reason why is there are a number of small businesses that have a number of affiliations that take advantage of the program. And theoretically, you may have one person controlling a number of entities, not necessarily a large amount, taking advantage of the program. So what the SBA is trying to do is to simplify the affiliations piece in really is if you control or have ownership of more than 50% of the business. Pretty simple. Again, I have several of my clients that have a number of businesses, and they've taken advantage of the EIDL program in different entities that they own. typically they do control over 50% of those entities. So that's important. It's big.
Mhm. As is number 5, when we move to number 5, where they have actually allowed some businesses that were too big to actually apply for EIDL before. They now have changed the rules, at least as far as this recovery program only. Whereas if you have no more than 500 employees per location, so you can have 10 locations with 60 employees and you have 600 employees, and whereas you only have 60 in one place, the maximum, you were not eligible for SBA programs because you exceeded the maximum number of employees. So this changes that to where you can now actually you can have up to 20 locations and have no more than 500 employees at any physical location. So that really kind of, along with affiliations, kind of helps out some of the bigger small businesses that have really either not been able to take advantage of the program or took advantage of an EIDL at a much smaller dollar figure than the traditional and historical $2 million, which it has been in disasters of the past.
One thing I want to point out, and I know pretty sure Kelly addressed this in a previous webinar, Niacc codes. Historically, Niacc codes were I don't want to say treated as an afterthought, but somewhat not really paid attention to by a lot of small businesses. Well, I can tell you, coming out of the stimulus program, the importance of having the proper Niacc code assigned, it could determine whether you would qualify or not qualify for loans. So just as a sidebar, make sure if you are in the proper Niacc code, that is indicated. If not, see what your Niacc code is and go through the process of changing it.
Yeah, and it is limited. If you do have over 500 employees, you need to be in one of those standard industry code sectors that are listed there. So it has to be an industry that has been pretty much impacted very severely by COVID-19 and continues having economic hardship. So not for everybody that has over 500 employees, but definitely for those that fit that particular need right there. And we did mention a little bit on the $10 million limit, so to a single corporate group. So
yeah, and that is there. This is a small business loan program, so you do not want, nor is it fair to other small businesses out there that you have a corporate group. I don't want to say gaming the system, but having the ability to do the multiplier and having more than 10 million in EIDL loans, given the favorable terms in repayment ability.
So the changes to the terms, we discussed the first 3 pretty good. Let's hit the requirements. So depending on how large of an EIDL loan you apply for, basically your minimum credit score needs to be somewhere between 570, and it has been reduced on the high end down to 625. And then when we get into collateral, Keith, you don't need any collateral for the smaller ones, but then when you get into the mid-size and the larger loans, would you like to comment on that?
Well, I want to go back up to the credit score piece. That's a pretty darn low credit score. I will tell you, most traditional lenders, you're not going to get financing if you're looking at a 570 credit score, 650 credit score. So the fact that the SBA will allow you or will consider, there are always other conditions in underwriting that they will look at loans with credit scores under 700. That's pretty big. We talked about the collateral requirements, where are we at? I'm sorry.
Yeah, on the collateral.
On the collateral. Typically, the SBA will look at UCCs on certain business assets. They try to be as flexible as possible in not hampering a business from being able to access credit going forward. What I mean by that is when you have a lien, whether it's a UCC or a deed of trust on a piece of collateral by any lender, whether it's the SBA or your normal bank, that can prevent you from getting credit in the future. And what I'm saying is yeah, your collateral's tied up in a particular loan. So it's important to understand what the ramifications of that is. Personal guarantees. I'm a big personal guarantee person, but in the EIDL program, the personal guarantee is required for loans that are greater than 200,000. I kind of differ from the SBA's position on that, and I think you should have personal guarantees on everything. But I'm an old school lender, so but that is fairly liberal there.
Yeah, he's not a credit available elsewhere lender, and that's what this program is, and that's why the terms are relaxed. They're relaxed because they figure there's no other way that they're going to get this money, and so you have relaxed credit scores, you have relaxed collateral. So let's talk about some of the uses now. Like, of course, there's the normal operating expenses and payroll inventory, but really where it comes down to the biggest change from this is the ability to pay commercial debt. And you can actually either make the payment or you can make a prepayment. Technically, you cannot refinance other debt because that would be the SBA taking out another lender, but you can use those proceeds that come from an EIDL loan to make either a payment or pay down or even completely pay off that non-federal debt. And then we've talked a little bit about federal debt being from a federal source, that it is available to make the regularly scheduled payments. You just can't make that same prepayment. Okay, some more of the changes that we have here. And I think we touched on this pretty good earlier.
Yeah.
Touched on the affiliation rules. There's a little more explanation there. Talked a little bit about the hard hit industries. I think we've covered that pretty good where further explanation isn't necessary. There is the actual change for number 5 and actually gives you those standard codes of those businesses that fit for those employers that have over 500 employees. So, and to qualify for the other conditions as well. So you'll see that those are pretty much industries that have been fairly well damaged, hit very hard. So moving right along, we look at kind of getting into the timeline now and the time frame of where things can happen. Remember that up till October 8th, anything 500 and under. And one issue that I have not resolved yet that I really want to resolve, and let's just say you have a maximum $150,000 EIDL at the time, and you actually want to increase that to $600,000. So you ask for $450,000 more. What I believe now is that even though you're asking for a $450,000 increase, I believe it would probably get added to the 150 and put you over the 600 and make your loan not be actually approved or even looked at until October 8th. So
if I'm guessing, and I have, again, I've not confirmed that either, but logically speaking, traditionally when a lender looks at making loans under certain authorities, they have to take into consideration your existing debt, and they add that on. So I would agree with you, Kelly. I would think that would kick you out.
So if you do have a 150 now and you want it to be considered now, you would want to go up to 350 for that consideration. And then potentially, if you're creditworthy, because this is still underwritten to some point, based on your gross profit. So it's your sales minus your cost of goods sold, which equals your gross profit before all other expenses and overhead and profit. That amount can actually then be used with their algorithm to tell you how much you're available to borrow. So that's the key thing as well.
Well, I guess one thing I want to add is there's probably some folks in the webinar that went early on with the EIDL, and then you have some folks that went midway through the EIDL, and then maybe you have some folks that are going forward now. The program has obviously changed. I think it's changed for the better. So if you were discouraged early on, whether it was a cap limit or processing, do not make that the decision of why you're not going to go forward going forward with it. So,
and as you see some of the credit scores, and I think that's a good segue into reconsideration, because if you were turned down initially and you are being reconsidered, or maybe even your reconsideration, if you have facts that have changed, again, go through that reconsideration process. It's the same process we've talked about repeatedly through the webinar series, but it is a process to where you have SBA reconsider your application if you were denied. Sometimes you were denied on factors that weren't even your fault, that they could not verify information. And because of potential fraud or waste, then they would not approve your particular loan. So SBA is adamant about, if you have an employer identification number that has already applied for EIDL and you were turned down, go through that process, the reconsideration process, because what it will do is if you apply again, it will kick it out immediately, because the computer will say, this person has already applied for an EIDL.
Yeah, I will. One of the things that I consistently tell people, all it's costing you is time. So if you've gotten declined, and early on there was some issue with getting tax transcripts and things of that nature, which slowed some things down, and still is. But it's, well, in my opinion, it's well worth going through the whole process to have the ability to get 30-year 3.75% financing.
And as you probably have noticed, if you've gone to the chat, Maureen Busher-Dang, our producer, has already put in the reconsideration information if you need to go through that particular process. And she has already looked at potentially other things as well related to EIDL. So getting back out of this particular chat, hopefully soon. Okay, so I see that we're getting quite a few questions in both the chat and the EIDL, or the question and answers. We will briefly in a little bit go to that. Let's go to our last slide here. And it is just basically on the process. So you see the process information. And what it's doing there is basically showing you that you need to pre-apply before you go to the portal. So with that particular information and information known, what happens is, there we go, is the application resources, and there's plenty of resources out there. We'll show you where these are, go through a few of them quickly, but it's basically, there's the website and FAQs, there's a sample intake, and then you actually go through a pre-application process where you're invited to come into the portal and actually apply. Okay, so let's kind of look at some of these resources that are available. And when we jump in, let's start here with the FAQ. So these are all updated as of September 8th. And so the FAQ is frequently asked questions of everything to do with the new rules applying to, and they're very comprehensive, 19 pages. So that'll be a resource for you that you can go to.
Kelly, I want to add, what that resource is those are questions that come to the SBA from a number of different, whether it's from borrowers, whether from CPAs, whether it's from any interested party. So it's really a gathering of national questions, not questions that are just in Kern County or in Mono County, but all across the country. So in a lot of the answers are there to your questions. So I've always encouraged people to go there first and see if the question that you may have has been asked and answered. And there's a high percentage of them that have been within that area.
So looking here is we see the kind of process that is available. And this is kind of like the economic injury disaster loan application. It's just kind of a streamlined look, and it's a streamlined process to begin with. So it's going to, if you're applying for the first time, what you're going to do is you're going to go through this eligible entity verification. And this is kind of the one-day process where you actually submit this, and then you're invited to come into the portal to apply. This has changed since a lot of you applied in 2020. Another thing is a change that we don't have here on a slide that I wanted to mention is that with the rush to get out a lot of these EIDL funds back in 2020, there wasn't actually an underwritten process. So if you received $150,000, you did not necessarily go through a process that said you were entitled to that by the normal algorithm. So that was kind of news to me recently, because I was under the assumption you would get double or 4 times that amount if you were already underwritten at that amount. But since you haven't been underwritten, it's a whole new process, and there can be declines that come out of that need to go through the reconsideration process as well.
So to reiterate that, what it was the SBA wanted to roll out a program fairly quickly. They had a disaster program, which was primarily for disasters that Kelly had mentioned earlier about the recent fires. Well, that disaster program was then morphed into a COVID relief. So you went from let's say a $100 million program to a $1 billion program overnight. And they were trying to get money out fairly quickly. Now it's more of a normal underwriting, which is very liberal underwriting, I may add, but more of a normal underwriting standard. So there are some other questions and eligibility issues out there.
So you will have to choose between these scenarios. You will also see these eligibility questions. Like number 4, is the owner of the application currently incarcerated? I picked that one because it was the shortest question. So, but here are the number of questions, and then it's submitted. You go through a continue process, some of the business information, your employer ID number, etc. And then you come back with the financial information that's here as well. Look at that, business data, financial information. Again, we go back to 2019 on this. So your 2019 is going to be your baseline for consideration. And again, here's where the money hits the road, right here. It's going to be your gross sales, your cost of goods sold, and then also your 2020 and your 2020 cost of goods sold. And from that, they use the gross profit and use the multiplier. They won't tell Keith or I what that is.
No,
because we'll tell you.
Yeah, but it's pretty consistent with what I've seen with who gets approved and who doesn't get approved. I will tell you, most people out there didn't know what a 4506T form was.
People know now.
They know now. So it's important that you comply with any required documents. And I always use the analogy, if they ask for 10 things and those 10 things that are applicable to your business, give them 10. Don't give them 6 and let them make a decision based on that. So
spoken by a true lender. who has probably seen that more than he cares to acknowledge. So that's kind of the process for applying. This is a resource and we will include it. We will be sending out the resources this week. And let me go to our last one. And this is going to be essentially the portal. It's going to be a look at the portal. And let's go right here. Okay. So this is kind of like the portal instructions once you get in there, and gives you some nice information. So this has really been helpful for us. I wish we would have had this last year, because I actually sat through a couple of clients. So I was fortunate enough to go through and see what the portal looked like. That was helpful, but it wasn't really where I could go in and fill out an application. But you go in and you, first of all, just to go through a summary of this before we hit our questions and answers, you create an account and then you sign into your account. Oftentimes you'll get an email that goes to your junk email, but really a lot of everything that is happening right now, the decisions, and if you in the past received, you need more information or information unverified, all that is now starting to happen in the portal. So it is unfortunate we couldn't have had more of a lag time, or somebody would have warned us that this was going to happen. But now everything is really playing into the portal, and the portal is where you go rather than email and other things to do things like request an increase, to look to see how your process is going, and you will be notified within the portal. And so here's just a kind of a quick look at that particular portal for those of you that maybe haven't applied, or maybe haven't been in the portal in a while. So just wanted to introduce you a little bit to the portal. We'll send you the link to where you can go through this if you want to see it later. All the other links, but I think it's time to hit some questions right now. So let's first hit the chat box and see if we have questions in there, of which we do. So we'll hit the quad and then go to right now, after, if you have a question to put it in the Q&A box. We'll be going there next. Keith, first question, is this the same as the PPP?
No. PPP loan was specifically for payroll and payroll associated expenses. That is a potentially forgiven loan. Those loans were directly from a lender, whether it was from a bank, credit union, or a fintech lender. And many of those loans have been forgiven, but the EIDL loan is a direct loan from the SBA. So you have to sort of flush the PPP piece out of it and think more about the direct lending from the SBA.
EIDL grant. First of all, I cannot get the bank returns for EIDL advance sent materials to COVID returns at sba.gov. What I would do is I would go to the chat and I would look for the disaster phone number, the SBA disaster loan phone number, and I would call them soon because they're going to get very busy again if they haven't already. But actually, the best thing that I am seeing, the best success is coming from people that will actually call the toll-free number and get the call center in Texas.
Absolutely. And the funny thing is there's always that misinformation. I can't talk to anybody. Well, typically you can. Now, it may take you a while, but you will get a physical voice on the end of those phone calls.
And if you don't, sometimes you might not get the answer you're looking for. Your experience might not be the best. Wait a little while and call back. We see Maureen has tons of links. Can EIDL be used to pay mortgage?
Well, it can be used to pay business mortgage debt, but if you're saying, can I use the EIDL funds to pay my personal mortgage? I guess the way I look at it, and I want to make sure I don't get in trouble for stating that, is money that you would allocate for business expenses, use the EIDL for that, use your normal income for, whether it's your draw to make a mortgage payment, but it's not your personal mortgage is not eligible.
Okay, I have just been approved and I'm so happy to say EIDL saved my business. That is fantastic to hear.
Yeah, I just, yeah, congratulations. It is, people are tired of hearing me say, I think it's a great program that the SBA had traditionally used with disasters, but was able to enhance and roll it out for the COVID pandemic.
How long does it take you to get approved? Well, if you're under 500,000, or excuse me, the SBA is saying that it will take 3 weeks right now from the time you submit everything. If it's over that, it goes into the exclusivity period, which I can't say, and that'll be October 8th, and then it will start getting approved on October the 8th. My credit score is 670, but I am still not getting approved.
Well, and as I indicated before, credit score is just one component of it. It's not they just don't blanketly, well, I have a credit score of 700. Well, you may have a credit score of 700, but you do not meet the financial historical requirements. So again, that's just one component. There's typically other reasons why.
Next question, is it possible to pay down the principal to below $25,000 to eliminate the CCC1 filing?
UCC one filing. I don't know. It's a great question.
It is.
I don't know. I mean, that's a direct SBA question. I don't know that answer.
One way might be to accept a loan that's less than $25,000.
Sure, but it looks like they've already gotten their loan and there's a UCC filing. They're trying to reduce that down. I don't have that answer.
And perfect answer for the call center question. I have an existing EIDL. Can I increase the amount or do I need to apply for a new loan to get additional money? You probably asked this before I mentioned that. But yes, you do go through if you have an existing EIDL, go into your portal and there'll be a green, I believe it's a plus sign, and it says increase my EIDL, and you can start the process right there within your portal. Thank you again, Maureen, for the COVID EIDL increase request with the letter S, plural, at sba.gov for increasing. You can also do that through the portal. I was told by an SBA person that your existing EIDL loan needs to be added to your new amount. I borrowed 10,000, want to borrow 30,000. I can only add 20,000. Okay.
So when you say told by an SBA person, what? Well, it's hard to we can get in specifics.
Let's assume the call center.
Yeah, assume the call center. So they're indicating that you already had 10,000. You want to borrow 30. You can only add 20. So in other words, you're looking at a cap of 30. That may be based on the determination of your income and your needs. So that's what I'm going to make the assumption. They just did the analysis saying, the max you're going to be able to get is 30 total. So your 10 that you've gotten falls into that 30 total.
Is there new information on the employee retention credit? Well, there is not new information that I'm aware of. And it's all kind of still tied to that legislation on what the date is going to be. But I can tell you this, that come back on October 27th and we'll have Michael Stevenson back, who we had on a previous webinar. And hopefully by then everything is cut and dried and we know all the final rules. Okay, I was denied last year for a COVID-19 loan. Should I reapply this year? New application or reconsideration, Keith?
Well, I would be interested why you were. First off, I would reapply now.
Reconsideration.
Reconsiderations because again, you always go back to, well, why were you denied? And did they deny you based on lack of information provided? Did they deny you based on, information that you provided unverifiable? Was there a business reason? So go specific and try to mitigate the reason why you were declined. But I would look at a reconsideration, especially if it's a smaller loan, because they tend to have the ability to get to those fairly quickly.
Yeah, unless it's a different EIN, if you use a new application with the same EIN, you'll run into more problems than you already have.
Right.
So what I would do is I would call the call center and talk to them about reconsideration. You got to remember, Keith and I talked about the IRS SBA form 45016,
Right.
which is essentially gives permission to the SBA to contact the IRS for your tax information so they can match up what you provided. So if that information didn't come back from the IRS, that was a big problem earlier this year, that it wasn't coming back in a timely fashion, and SBA, I believe, in my opinion, had to deny those loans because there was a certain amount of time they had to approve it and they didn't have the information to. And I think they changed and fixed a lot of that, and maybe it got a lot better, but it could have been something as simple as nothing that you could have controlled on why you were denied. So I would go in and do a reconsideration. And first of all, I would call the call center to try to see what the reason was for them. That was one of the things SBA mentioned, was that they were really having a problem with was getting people the information on why they were declined. And really with moving forward and with the new changes that have happened in the last couple of months, that they had hoped that that would all be in the portal and be a lot more simple.
Yeah, just want to speak to the 4506T IRS issue. Keep in mind, I think Kelly mentioned this on an earlier webinar. The IRS, along with a lot of public and private companies, were impacted by staffing and working remotely. So that caused slowdown. And more importantly, the system was not built for the volume of requests that had come in. So it's just a lot of it's timing. A lot of it's, this is such a unique situation where they were normally used to getting, let's say, 500,000 requests for transcripts a day, and they were getting 2 million. So when you have a system that's not built for that kind of volume, there is a bottleneck, and the SBA is required to verify that the information that you've provided in a tax return is the same information that you filed with the SBA. So that's important to know that.
And I will note we are running long, and we will run closer to 1:30 if Keith is available.
I can probably do another 10 minutes.
Another 10 minutes, so we'll just keep them going. Can a new business apply for EIDL? The answer to that is no.
No, you don't have it. You don't have, keep in mind, and Kelly alluded to it earlier, the magical period is 2019. And looking at the impacts of 2019, going forward as a benchmark. A new business is a startup venture, so you would look to some of the other SBA programs.
There are
and other
others.
programs out there. So there is as with any type of economic downturn, there is a lot of new businesses that are being started. People that have taken stock of what they were doing during the pandemic, decide, I'm gonna take a flyer and do something different. So I encourage you to reach out to the SBDC and other organizations out there that assist in startup businesses.
Okay, you did call the call center, and that sounds like a great outcome. Oh, you're very welcome.
Yeah, again, we cannot emphasize enough. You will get somebody. Yeah, it may take a while, but you will get somebody, with the call center. So I really encourage you to reach out.
On my portal has a green button to increase amount. I already have a loan. Is that the same button to request more? Yes. But again, if the combined loans go over $500,000, you will be put in kind of a waitlisted form till October the 8th. We will be sending out materials. Let's hit the Q&A. Okay. Haven't received information on additional SBOG funds. I will reach out to you specifically. And hopefully it's before I lose my voice. Let's move down to. Okay, I have business debt on a personal credit card. As I could not get a business credit card, can I use some of my EIDL to pay down that business expense? You know,
I would say yes. I mean, if you again, it's all about documentation.
Exactly.
So if you're showing a credit card advance for Harris Casino in Vegas, well, that's a questionable business expense. But if you're showing a credit card advance for
Costco,
Costco,
you buy food there every week,
or for Office Max, or for a business vendor, then that is a legitimate use in. And again, it's all about documentation. So I mean, it's the same documentation that you're going to have to provide your tax preparer as you're looking at your year-end business expenses. So
yeah, and I think that they could even want to, if you ever get audited, they might want to see where those expenses correlate on a general ledger.
Absolutely.
So just being able to document it and show them that you were used in the funds, and maybe it's a routine.
Which you normally have to do when you're preparing your taxes anyway. So
the score for approval was 670. Now it's 570. They have lowered the. I didn't believe it was probably at 670 when we started webinar one back in March.
Yeah, but that's for smaller loans, and again, I can't emphasize that the credit score is just one component of the underwriting. So don't just hey, my credit score is 700, but I'm a brand new business, or it's 700 and my 2019 numbers were really low, but I'm saying it should have been. So there are other things besides the credit score. The credit score is one important component, but it's not the only component.
Keith, can I get an EIDL? Can I use EIDL funds to pay off my current commercial loan and get an EIDL for 1.2 million to restructure my building loan, and my rent would be lower?
No.
What if it's non-SBA?
You can
or non-federal debt.
You can pay payments, but you cannot refinance debt with EIDL. At least I did not see that as eligibility under the EIDL program. Now, can you take monies that you would normally use for your working capital and use your EIDL funds for that, and then use those funds to pay off debt? Well, yeah, I think that is a smart use of the program.
And it takes about 80 webinars before I will slightly disagree with Keith Brice, but I think you might be able to non-federal debt, pay it down or pay it off entirely. So
Kelly's got me looking at
I got him going to the SOP while I go down to the next question and see. This is one of the benefits I had of being able to look at that a little longer. Now the gray areas is prepayment. So what does prepayment mean of commercial debt? Prepayment, is that making 6 months ahead, or is it paying off? Kelly and I differ on that, but I know you can't do it with SBA funding, but that's a good question.
Don't know.
It took 80 webinars for
Okay.
us to finally.
Okay.
Okay, next one. What are the details of the IRS guidelines on startup funding? Pop-up saying IRS provides startup funding. Is this true? No.
No.
The
never.
IRS does
The
not provide
IRS
startup
has
funding.
never provided funding. The IRS is more of a collector, not a funder.
Now, the one thing is, I have received something from the IRS regarding the employee retention credit.
Right.
Now, that's not startup funding,
Right,
but you know,
exactly.
if I recall, and I'm trying to think back, some of the pandemic relief programs recently have changed to, they allow post, March 1st, 2020 businesses. And I believe the ERC is one of them, but I'm going to defer that to our professional when he comes in a few weeks. So I'm a bit confused. Can I use my EIDL to pay off my income taxes as I'm in a payment program? Can I pay off or just use EIDL to make my monthly payments? I don't think EIDL's loan is designed to pay off income taxes.
Well, it says that, that's a great question. It says it's now eligible for federal debt. So is it federal debt, which is if you're on debt payment? I don't have the answer to that specifically, other than you may be using, you may have other debt that you can use the EIDL funds for and direct those monies towards your IRS debt.
And I would look at, is it business debt? Is it debt from, say, payroll taxes or corporate income tax?
Right. Mm-hmm.
Because if it's personal, I don't think you have a leg to stand on. But there is a way that you could use EIDL payments to take a draw and then use that draw to pay that.
Right.
I think you just said that. Okay, so sorry, I'm skipping over some of the longer questions. If you want to send me an email with those, or I can kind of look into it. I know we're running out of time and 14 minutes over. Where do you go to add to your already existing loan amount? I've received 99 and would like to increase 400. This probably came in after we've already answered that question. Go into the portal, hit the increase amount, and start the process in your EIDL loan portal. Okay, does it still have zip code limits? And I believe you're referring to either the targeted or supplemental EIDL.
Yeah.
And it's actually census tracts within zip codes. Cruising right down. What if you were funded the full 500,000 EIDL and then sent back a portion amount and now like to request an amount back? Well, I think that that's a perfectly logical request.
Mm-hmm.
I don't think the SBA intended to be doing this 18 months into this pandemic.
That's correct.
So I would go in and I would request more funds. And if you run into an issue, I would call the call center.
It's interesting. I've had several clients that initially were approved for a larger amount and opted to take a smaller amount, and were subsequently kicking themselves for not taking the full amount. So I've encouraged them to go back and request their increase.
If I apply under the 500 or 500 and under now, can I reapply in the future for another increase? And the answer is yes, absolutely. If you applied now, it seems to take about 3 weeks, but you have to wait until after a decision and that loan has been funded. And then you can go back in. But again, remember, this is all going to be, there is always some underwriting criteria based going back to your sales.
And the other thing is there's only a certain pool of money available. So yeah, you're better off sort of getting the 500, with the ability to apply for the increase, but there may not be funds available for the increase.
And thank you, Jason. In the portal, there's no plus sign. It's a green button, and it gives you the opportunity then to go in there and it shows your existing loan amount and a sliding scale to increase that. Oh, you guys are so lucky. You get to go in the portal. Man. Is it true that if we move out of California that we have to request SBA's approval? I'll take that. I believe that if you use the idle funds to move, you run into problems. Because I believe, and then you need to go back to your LLNA, your loan agreement and authorization. And I believe in there is a clause, I haven't looked at one in a long time, but I believe there is a one in a clause that says that you can't use idle funds to relocate your business. Okay, last question. Are independent contractors, do they qualify for this idle revamp? Yes. How will they size the loan? And again, it's on generally their algorithm with gross profit that we've been talking about. And we're generally not approved for the original idle, only the PPP. Well, then you're either going to be a new application, a new applicant, or you were originally declined, and you would need to go in and do a reconsideration. Okay. I think that's it. Boy, good to see a few million questions again. It's been a while.
Yeah.
Good program. Good program. I hope you take advantage of it. There is so much out there right now. It's such an opportunity that never existed. So have some success out there. Share it with Keith and I. We love to hear your success stories. And again, big thanks to Keith Brice. I know he's busy these days, and I know really getting him in here today was huge. So Keith, thank you so much. Great to have you back.
Thank you, Kelly. It was always fun. And I guess one thing I would want to leave everybody, there's a lot of small businesses out there that are coming out of this pretty well. So if you have the ability to access these resources that will take you to the next level, please do so. Don't wait. And I think there's better and brighter days ahead of us.
Yeah, and one caveat to all this that I don't think either of us mentioned is that really one of the eligibility requirements of this is that you need the funds because of COVID-19.
Right.
So keep that in mind as well. Okay, well, for Keith Brice sitting to my left, this is Kelly Bearden, and we'll be back with number 81 next week with some rural loans and rural lending, some really unique programs that are going on in that area. So everybody have a great week.